Hi, this is Lynn from Mapit.
This is Randa with Mapit.
For over a total of 10 years, we've dedicated our lives to helping our clients sell, buy, and lease real estate. Our mission is to share our story and experiences in hopes of helping others on their real estate journey. Welcome to the Mapit Show. Hi everyone, welcome back to the Mapit Show. We have a lot of inquiries and questions about mortgages again, and we invite back one of our favorite guys, Stephen Ho, here from Contact Bank, to talk more about the current market situations and the new program, and the interest rate, and the different programs that he can introduce to all of you. So, Stephen, welcome.
Thank you for having me.
Great.
So I heard that you guys have pushed out a new mortgage program that focused on the small business owners. For like, we know a lot of people, like especially a small business owner has like their own financial problems or issues. When they go to the big bank, it's like
It's more difficult to get like a loan.
Yes.
So how does your bank resolve that?
So Quantic Bank, we are a community lender, and we are located in Queens, New York. One of the unique products that we have that many lenders, and I would say 99% of lenders don't have, is our community development program. What's good about the program, and again, I would encourage someone, if you're looking to buy a house and you have a local bank, you can definitely check with them and check to see what their rates and what their programs they have. That's always a good option, especially if you're banking there and it's something you could do. But if you know your situation's a little bit different, and what I mean by different is, today when you get a loan, what happens is you're always, you need to provide your taxes. Okay?
Yes.
And most lenders will ask you for your 2 years taxes, and of course you need to have money in the bank, and you need to have some credit, whether it's good, bad, or whatever the case may be. But the biggest factor in lending today is you're going to need income. You have to show 2 years worth of tax returns. And typically when you show those tax returns, you need to earn enough. Your income has to be enough or filed enough taxes so that it can support a mortgage. Now, if you're self-employed and you own your own business, with all the write-offs that you have, and not that you don't make the money, just the way you file your taxes, you have a lot of write-offs. Now, if you've been through a loan process before, you might learn that it's not that simple. Or you learn that you have to provide a lot of documents and to support your income, and sometimes you have to provide not only your personal taxes, your business taxes, and then when you add it all up, maybe you're not making that much according to your taxes, right?
Yeah.
So what our product is, we actually don't need any of that. Very, very simple. We don't need any of those documents. It's super easy.
That's really changing the game.
It is. We are a game changer. There's so many articles, local articles in the secondary markets. Wall Street talks about us a lot. We've been on CNN at one point, CSNBC, talking about our products. And they call it the no-doc loan again.
Okay.
But what's different than what happened in the meltdown in the past is, back then you would do a no-doc loan, and it would be 0% down. You can get 100% loans. So
that's where
that's where the bubble burst.
Yeah.
We've definitely learned our ways. All the banks have learned their ways, and what they've done is they've taken a more serious analysis on how this program can come back. And what makes it come back is we'll still do a similar type of loan. It's kind of like a no-doc loan. We call it community development loan.
Okay.
We're not looking at your taxes, but this time we want you to put more money down. We want you to put at least 25%. So
that's still not bad.
It's very good. For someone who's a small business, they earn a good living, right?
Yes.
Business owner, most of them, especially if they have an established business. For us, we only need a 2-year business. It's very simple. As long as you own your own business for 2 years, you can get a loan. If you have 25% down, you can get a loan.
25% is very low compared to a lot of other banks.
Yeah, and what's good about that, on top of the 25%, some business owners, for lack of a better word, they might not want to have their bank account liquid with money for their own purposes.
Yeah.
We also allow gifts, so you don't necessarily have to have all the funds available today if you want to buy a house now. Most of our buyers, they get gifts from family members and relatives. Some overseas, they get gifts, and they can supply that 25%. So our program's simple. 25%, you need good credit, and if you're a business owner, this is probably the best program for them.
But when you see good credit, is that like 680 and up or 730 and up?
So we can go down to as low as 660
Oh wow.
on this program, the community development
Okay.
program. But I want to shorten that word. We just call it CDL.
Okay.
So instead of saying community development program, we'll just say it's a CDL. So our CDL program is can go as low as 660, but if of course, if your credit's a little bit lower, you may need to put a little bit more of a down payment.
So it's not undoable, but
It's not undoable.
It's just more down payment. Because
Yeah.
I know a lot of banks wouldn't loan you if you lower than 680, right? That's kind of like the guideline. That's as far as I understand.
Typically, you want to have a decent credit. Credit does affect your interest rate. The
Okay.
stronger your credit is, the better rate you'll get, and that's how we determine risk, right? How most lenders determine risk. There are programs that can allow you to go down to the 500s. That's not a CDL loan. These are government-sponsored loans, and such like the FHA loan.
Really? Oh wow.
Yeah. I've done several of these loans, and some buyers they need this loan. Perhaps if you're that buyer, and this is not CDL, this is not the CDL program. Perhaps if you're a buyer and you haven't been perfect with your credit, but you have a good income, you can still get a loan. And what's good about that is on top of that, you can also get grants.
Yeah.
Especially if you're a first-time home buyer.
So
Yeah.
a good income, like what is considered a good income?
Here's the math. This is what I like to say. If you know what your budget is, what you can afford on a monthly basis,
Okay.
you need to know your income needs to be double that amount. That's a good way to
So
calculate that.
let's say your monthly mortgage is gonna be 5,000, just
Yeah.
round number
Mhm.
there. So at least you have to make 10 grand.
You need to make a minimum of 10,000
After tax or before tax?
before tax, because this is
Okay.
how we look at
So
it, right?
gross income.
Yeah, so
Okay.
pre-tax, you should be making at least double that, because what happens after tax? You get your tax taken, and then you have
Right.
whatever's left over.
Yeah.
So the bank's actually being very reasonable.
Yes.
Because if you're making 10,000, maybe you're taking home 6,500.
Yes.
And if you can afford a $5,000 mortgage, great. But I think you're only having a 1,500 monthly residual. Yeah, you need money for utilities, you need money for food. So what the bank is actually very lenient
Yes.
when they do that calculation
Yeah.
on how much you can afford. So that's not bad. But this is kind of the quickest way for you to determine how much you can afford versus how much loan you can get versus how much you make. And that's a good calculation. And of course credit makes a big difference. So if your credit's low, expect a higher interest rate. If your credit's high, you can probably get what we call like the A plus credit or A plus type of rates that are out there.
So let's go back to the CDL.
Yes,
Because I think that's where you guys stand
we
out.
specialize that.
Yeah, so you kind of stand out on that. So for the small business owner out there or independent contractors like us, we are independent contractors. So do we qualify for that or?
Absolutely.
Okay.
What we consider a small business owner or independent contractor, for example, you can be an accountant, you could be a real estate agent, you could
Contractors?
be a contractor.
Does it have to be personal name or company?
Personal name.
Personal
Yeah,
name.
because this program though it is very mixed, and we do have a diversity of products where you can buy that under a company as well, and that's also considered a CDL loan.
Mhm.
The first program that we expect is you buy it as a primary home. So this is for someone who's an independent contractor or someone who's self-employed,
Mhm.
and you want to buy your first home to live in, and perhaps you can't get a traditional loan like from all the local banks and the big banks. These big banks, they may not want to take that risk,
Yeah.
right?
Yeah.
But we're a local bank, and we've already done our calculation, we've done the math. Basically, our local bank, most of the community in our area are small business owners.
Yes.
And we've learned and we've gained experience on how to offer this type of product, and it's been doing really well. So if you're self-employed, what we consider self-employed, a taxi driver, he has his own business usually.
Yeah.
Uber
Yeah,
driver.
Uber.
So Uber driver, a nail salon owner, a restaurant owner, all these types of small businesses, we consider small business. It may be difficult for you to get a traditional loan because, just as those examples, a lot of that income that you're getting, perhaps a lot of your sales are cash, right?
Yeah.
And if you're reporting that cash, you're probably writing off a lot of expenses.
Yes.
And you may not be able to get a traditional loan that way. And for those that's tried, you probably would know, or if you go to a local bank and you ask the loan officer, they'll probably tell you, I want to buy a house for, let's say, $300,000. They say you're only showing $18,000 after expenses. You probably can only get a loan for a car, or something like that. And there's nothing wrong with that. Usually you have excellent credit. Usually self-employed, they're very well at managing the credit.
Yes.
They're very well at managing clearly their expenses.
Yeah.
But they just can't get a traditional loan these days. And when we came out with this program, and we came out with it nationwide, so anyone.
Oh, so
anyone in the country,
nationwide.
yeah.
All the states.
And all
So
50
every
states.
state.
Yeah,
Okay.
I just helped someone in California,
Oh wow.
and Florida, and I've never met the customer. We've communicated entirely through email and social media.
Wow.
They found us through social media. They looked us up. They saw one of the videos, and we did the loan for him. He was surprised he could get it, but this particular customer, a few of these customers, usually what ends up happening is they get declined. And when they get declined by a lender, they scramble. They start looking. They start searching online. They Google, and they find us and they give us a try. And based on their situation, we were able to help them. And they fit the exact profile. They own the business. They have good credit, and they have enough of a down payment to purchase the home. And we were able to help them, and they're very happy. And we get the reviews from these customers, and it's good that we can do it. And because it's a simple program, we don't need to be face to face. The documentation is very simple, so it's a very simple process to do.
Quick loan for small business owners.
Quick loan, yeah. It's kind of, you can tell. You can kind of say that. We have a coin and name. Right now we put CDL. Is the name that we.
Okay. Okay. So basically, you don't even need their tax returns. You don't.
We don't. If I were to give you a checklist today on what.
It's so simple.
It's a very simple checklist. I need your ID. Right, I need to know who you are. And the other thing is I need to know your credit. That's part of the ID. So that's one thing right there. The other one is I need to know your business. So I need to know what kind of business you have, and that's one thing we need to get from an accountant. If you own your own business, we just want an accountant letter from your accountant saying your business, what type of business it is, how long it is. As long as you're a business owner for 2 years, that's the biggest thing. If you're an Uber driver, you gotta be an Uber driver for 2 years. If you own a restaurant for 2 years. Yeah, so 2 years kind of like the magic number. And then we want to see your money. As part of the program, for some of the self-employed business owners that may perhaps have a lot of activity in their bank account, one particular aspect of our program, we don't need bank statements. Which is tremendous,
You don't need bank statements.
No, we don't.
Wow.
Yeah, we don't. So we could even not see your bank statement, as long as you can show us proof of funds.
Oh, okay.
That's,
So kind of like bank letter from the bank saying that how much they have with us.
Yeah.
Oh wow.
Yeah.
Because
Is there like a seasoning period?
No. So here's how we work this program. If you're not going to show me your bank statement and we want to see proof of funds. We basically just want you to open a checking account with us, and then you transfer your funds over to us, and that to us is enough proof of funds.
Okay.
Yeah.
All
You
right.
don't need to see that bank account.
So in terms of like interest rate, how that would vary, and how long is the term of the loan?
So this product has 4 different programs. It has a 5-year fixed, 7-year fixed, 15-year, and 30.
Okay.
The rates vary based on credit and down payment. That all depends. I mean, theoretically, you can be rates in the 4s or even in the 6s, depending on how strong your credit is, the type of property market you're buying. So if you want to look at a range, it probably could be as cheap as the high fours, or as high as expensive as the sixes. So that's gonna be a range. And a lot of the times when I talk to someone who's self-employed and I give them this option, it's mentally it's a number, right?
Yes.
So, but when you break down the payment, it's not a big difference in terms of what the monthly payment is. Yes, 3% sounds great, but if you can't get a loan for 3% and you're getting a loan for 5%, let's say, and the difference in payment is maybe $100,
but you
but they can get a loan,
Yeah.
it's a win. But on top of that, when you kind of compare the different programs, what's great for someone who's self-employed is if they were to choose the different programs, I always ask them this question: are you going to be holding on to your mortgage for a long time? Or are you going to show more income? Or so I give them different options based on their long-term benefits. What is your long-term goal when you buy this? You want to buy and then you want to sell in a few years. Is this your first starter home? So and then that's how they decide, or this is how I would give them recommendations which program they should get. Because if you're getting an adjustable and your interest rate's only fixed for 5 years, you don't know what's going to happen in year 6. We don't have a crystal ball to determine that, right? But if you want to get a fixed rate because this is it, you're going to stay here, you're going to raise your kids here, you're going to have a family, and you perhaps may not file more taxes to get the traditional type of loan, then go ahead and get the 15-year fix, or go ahead and get the 30-year fixed rates. Yeah.
Okay. Oh wow.
So there's so many options with this loan.
Yes.
But at the same time, it's very flexible.
Yeah. What I like to say is the CDL loan is extremely flexible and it's easy to do. If you fit the profile, there's almost no reason you can't get a loan. The only time that it doesn't fit is if perhaps the property is not, there's nothing wrong with the property.
Got
right?
it.
So that would be
violations or
even with violations. If we see it ahead of time, we are very flexible with that as well.
Oh wow.
Yeah. Could be a different topic. Could be a completely different topic of conversation. Yeah.
Yeah, because that's also one of the biggest issues in this industry. Because in our area, there's a lot of homes that has violations,
sidewalk living,
so many different things that can come up during before you going the whole home buying process. You find all these different things, and you guys can do that, right? You guys can take those cases.
We have so Quantic has a really strong legal team, and because also we are a community lender, where because
so you're locally,
because we're local, we're extremely familiar with what's the difference between a minor violation and what's the difference between a major violation.
Yeah.
So usually when there's a situation where there's some violations, what we do is we take a look at the property right away, and we'll make a determination. So we're not saying no, and many times we'll say yes, but it's case by case. But we are flexible. We have done cases where there are certain instances where there's violations, and we were able to get past it, and we're still able to close, leaving it the way it is. Yeah.
That's awesome.
Yes.
I think that's
It is very good.
Yeah, it's better than the program you introduced the last time, right? I think that
Perhaps.
Yeah.
we're constantly evolving. We're looking at the market. We're keeping an eye on the market. We're looking at different trends, and we're continually trying to be better in terms of flexibility. Rates are rates, right? If the rates are high today, rates are low tomorrow. That could change the market. That could change the buyer's intentions to buy. But I think what's more important is with the different programs out there, it's important to constantly have more flexible products and keep it simple.
Yeah.
And that's kind of how the industry is. It's like a cycle, and we're kind of going through that cycle now where we're trying to improve constantly, and we want to be able to give of course the benefit of homeownership too.
Yeah, because just like people say, like when you buy a house, location.
Yeah.
And another thing is what's the best time to buy? It's always now.
Yeah.
Right? Because if you look at 30 years ago, people pay 300,000. Now they're selling 3 million. You look like, wow, they make a lot of money, but 300,000 at that time is a lot.
Right.
So 30 years ago, it's a lot of money they putting in. At that time, they probably think, wow, it's a huge investment for them. So it's just like, it's always good time to buy now. And with the program that you have, it's gonna help a lot of small business owners
Yeah.
to able to achieve their big part of American dreams.
Yes.
Definitely, and I think for those of you who are watching and you're thinking about becoming a homeowner and homeownership, it's a good idea to contact Steven directly and get pre-approved.
Yeah.
So this way you know exactly how much you can afford and what your budget would be.
Yeah, I thank you for bringing that up. I think getting pre-approval is tremendous.
Yes.
That part of the process is so important when you get a loan, because before you buy a house and you say what's my budget, and part of your conversation, part of your thought process is I need a home loan. There's a lot of theories that you may personally have that you think you can get a loan, but unless you've gotten a loan within the last few years, take that theory out of your head. Take that myth out of your head, and talk to someone like myself. Talk to a loan professional, and send them everything. Have them take a look at your financials. For us, we look at your credit. If we're gonna do your net income, we're gonna look at your income. So little things. It's not a lot, but it's very important to do that homework up front.
Yeah.
To make sure you can get a loan before you take that huge step. You gotta think about it this way: if you're borrowing $500,000, don't think you can borrow $500,000 based on something that you have inside your head. And there's a lot more involved. Even though you're talking to someone like me, there's so many people involved in the process. There's processing, there's a whole industry behind this. So it's important to know when you want to buy a house, you have to go through that process up front.
Yes.
So then it becomes a smooth process later. If you want to buy a house today, don't try to get a pre-approval the day you sign the contract. That's not the best idea.
Yeah, that's you set up to screw yourself.
That's a setup for failure.
Right.
Yeah, it's like we had so many calls from buyers. Then they're like, yeah, my cousin said I shouldn't have problem to get a loan. What does your cousin do? It's like they will believe from the relatives or friends, like, oh yeah, no, that's not a problem, but consult a professional, please.
Yeah.
Get that piece of paper. It's really important.
Yeah.
For us realtor to help you, because
and also for the homeowner too, because a lot of the time they do ask if you're serious. I need to see some kind of pre-approval to make sure that you can afford the house.
yeah, that's a big deal.
Yeah, it's not a sales pitch, right? It's definitely not a sales pitch. If you're a serious buyer and you need to get a loan, you need to make sure you can get a loan.
Yes.
That's like the most basic.
Yeah. It's basic step one. If you're gonna cook, you need knives.
Yes.
Yeah, exactly. So Steve, tell us your social media and your Facebook. How can we reach you?
So you can go to quanticbank.com.
Okay.
That has all our information. quanticbank.com/SHO. That has all my information on there. You can also find me on Wechat, actually. Which I believe is Steven18187.
Okay, so thank you so much for watching today. If you have any questions, please leave them below. We'll get back to you as soon as possible. And hopefully we can bring Steven back to answer all your questions again. Then his contact will be below as well. Thank you so much.
Thank you.
Thank you.